Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today it's a very exciting day for me because in the flesh I have Alasdair Haynes of Aquis Exchange. Alasdair, how are you?
Very good to see you. Not completely in the flesh, I hope.
Nearly.
But, that might be bad.
That's the late show. Alasdair, listen, lovely to have you back on the show. About 18 months ago, I think you first came on. And we had a discussion that was, as I said to you beforehand, one of our most ever listened to and downloaded. So brilliant to have you back on, and hasn't everything changed? It's a different world again all of a sudden.
The world is a different place. I'm delighted to say, we've made significant progress as a company, and it's nice to be actually here in person. I mean, that's the big change.
That's the big one,
is getting people back into the office. I think people will be more innovative, and this is just tremendous, really.
Absolutely, absolutely. So look, we're going to unpack a lot of that. We're going to hear about the 18 months. Before we get into it, and for people who've missed previous shows, tell us a little bit about Aquis Exchange.
Okay, well, Aquis Exchange does three things. We operate an MTF, that's a multilateral trading facility, both here in London and also in Paris, so that we can trade all European. And we trade the top 2,000 European stocks under a unique subscription model. We're the only exchange in the world that actually trades just like a mobile phone company. Yeah. In other words, we charge people by message traffic rather than charging people by value traded or number of shares. Yeah. And that has made us probably the second largest liquidity provider in Europe today. We execute around about 5.5% market share. That makes us the seventh largest exchange group in Europe today. And that's our sort of main core business. But from that, we've built also Aquis Technologies. So we license and sell technology to startup exchanges, to different asset class exchanges, some more traditional exchanges. And then our third business, which I think we'll talk quite a bit about today, is the Aquis Stock Exchange, the primary market, where, as you know, we bought around about 2 years ago now, the Next Exchange. And we've radically changed that business.
Yeah. And that's, I mean, it's you talk everything about, I mean, it's so fascinating, isn't it? And you mentioned there about where you sit and where you lie. The scale of growth of that is phenomenal, isn't it? You must be really proud of it all.
I am. Over the last 18 months, last year's results, we grew revenues by 42%. We increased our profits by 5 times. Yeah. So, we've got great growth, and I'm really happy with the way things are going. Obviously, the future, nobody can quite predict. I think we've got a lot of issues. I mean, there's the tragedy that's going on in Ukraine. We've seen supply chain issues because of China, commodity prices higher, energy prices higher, cost of living going up, inflation going up. All these things as a backdrop doesn't necessarily mean sort of healthy things for investors. Yeah. But actually, I think there's some tremendous opportunities out there as well.
I think that's very much the case, isn't it? There's a we mentioned before shooting this, I shot a FinTech Focus with Mark Beeston over at Illuminate, and we were talking about the opportunities within the sort of volatility that we're seeing at the moment. I'm going to come on to that in a second because I want to rewind slightly to our last conversation. And what I loved about talking to you about that time is you were on the offense as opposed to the defense during a really difficult time. The pandemic was ripping at that sort of stage. There were people there being very cautious. You took quite a bold move at that sort of stage, and as you say, invested, grew. Your headcount went to levels which they'd never been at before. There was a lot of bravery around what you were doing at that sort of stage. Tell us how it's all played out.
Well, I think it has, better to be born lucky than clever many times. But, it's played out well for us because it was the right time to invest, and we will continue to invest. I think that the markets are significantly changing. The paradigm, it's an expression I really don't like, but the paradigm is shifting. If we look at things like primary markets, the way primary markets have operated for growth companies has been the same for so many years. Bringing competition into that area is so needed in this country and actually across the whole of Europe. If I look at what this country does, we are phenomenally good at raising capital for startup businesses. Yeah. Many of your viewers may not think that because it is difficult to raise capital, but with EIS and SEIS, and with the high net worth individuals out there, the qualified investors, family offices, generally a good entrepreneur with a good plan will be able to raise capital. Yeah. I think the issue really comes, which is why what we're truly focusing on at Aquis, is that when those companies start to prove themselves and they start to grow, they've had their proof of concept and they want to scale up.
Yeah.
This is where the country is really bad.
Yeah.
Because the only choice really is venture capital. It's
Yeah.
never been seen to be the public markets. And you hear the government talk, following the Lord Hill review, about we need to change the way that listings work in the United Kingdom to keep unicorns. Well, in truth, the unicorn businesses are always going to go today to NASDAQ. If
Yeah.
you're a tech business, you're going to take, because you get the higher rating there,
Yeah.
most entrepreneurs are going to move off to America, and they're going to go to NASDAQ and get the highest price.
Yeah.
I don't believe the government is right here by changing the rules to think people are going to come and list on the London Stock Exchange simply because of that.
Yeah.
What I think needs to happen is the public market should be used for scale-up capital, so that these companies, instead of going public when they're 2, 3, 4, 5 billion,
Yeah.
should actually be going public when they're 20 million, 30 million, 50 million pound market cap.
Yeah.
And the public market should be used to raise capital for startup businesses. And that is one of the things that just doesn't happen today. Why? Because people see the public markets as expensive.
Yeah.
They see the public markets as a standard that is, too high for them to achieve, or too costly, takes too long.
Intimidating as much as anything.
It is,
Yeah.
and that has to change. I think I've mentioned in the past, you've probably heard me many times, but
Yeah.
companies are like children. They start small, they grow, and they mature.
Yeah.
We send our children to primary school, in order for them to learn how to learn. We're not
Yeah.
teaching them things so much, but it's learning how to learn. We've created a marketplace that actually is a primary school for companies to learn how to be public.
Yeah.
And then you move them up the chain to secondary school, for your children. And here we move them up into what we call our apex market, and you get given homework when you're at school. Well, here, we put more regulation, more responsibility on you. And you gradually work your way up through the schools till you end up at university.
Yeah.
And that means that you get the right proportionality and the appropriate trading mechanisms for companies at an earlier stage, which
Yeah.
makes the public markets then very attractive. What we do today is we tend to send sort of 4-year-olds off to university,
Yeah.
the equivalent of.
Yeah.
And companies that have 10 or 12 staff that are just starting to either grow their revenue or just becoming profitable shouldn't actually have a regulatory standing that the same as HSBC or BT or Vodafone.
Yeah.
It's not proportionate. It doesn't mean lower standards. It's just not proportionate for them.
Yeah.
And therefore the cost base is wrong. And this puts people off.
Yeah.
We're changing that. And I absolutely believe in a post-Brexit environment, there's never, ever been a more important time to get capital out to growth companies.
Yeah.
And you've got to remember, what is a stock exchange's raison d'etre? It is about getting capital. Everything we do, whether it's in the technology, whether it's in the large cap business, which is trying to promote liquidity to reduce the cost of capital, it's about getting capital to growth companies. And post-Brexit, that's what the United Kingdom needs. So I think we're in an incredibly strong position to be able to grow and change the economy. And particularly, if the cost of living crisis continues, then we absolutely, these companies, these SMEs, these great companies that this country has, need to get finance.
Yeah.
And it's a great way of getting finance to these people. And good companies, whether it's recession or no recession, good companies will need capital, and they will get through that recession and be great investments for people.
Let's speculate on that a little bit, because there's been some pretty major headlines written about the state of the economy and what's coming, and I think Jamie Dimon just called it an economic hurricane coming our way. We've been quite robust over the last decade or so, and the last 2 years have obviously created some headwinds which need to be addressed. From the amount of money that got put into the system, and there's going to be a levelling up on all of those sort of things, which I think people understand. What does it look like? What's your prediction on what the markets look like over the course of the next 6, 12, 18 months? Are we buckling up for 6 months? Are we buckling up for a year? Or is there any need to buckle up at all?
Well, I think from an investor point of view, you need to take away what the macroeconomics are to actually what the individual investments are. Even in great bear markets, you have stocks that outperform and actually rise, and people can make money. I think, when we look at the whole economic climate here, it doesn't look a good picture in the future. I think there's a lot of people, you and I are of an age that remembers inflation.
Yeah.
But there's a whole generation out there that doesn't know what inflation really means. And inflation is one of these things that if you print money, as we have done over the pandemic, then almost certainly as the money supply grows, it creates inflation. And if you open Pandora's box, then you have lots of problems. And frankly, it's open. You know, we've got inflation above 10% in many of the economies around the world. That isn't a good sign. And it's really, really difficult to try and hold back inflation. And there's many people in power, policymakers, who again have never experienced inflation themselves. So I think from that point of view, it's a pretty serious thing. That said, you know, this gives enormous opportunities out there as well. So I view this as, yes, it could be a prolonged bear market out there. It's perfectly possible. I hope that is not the case, but it is not. You cannot rule it out. But on the other hand, you've got to look at what sectors, what areas are really going to achieve. Because in the past, you know, we've seen the dot-com boom and bust in 2000. And I remember in the 1990s, people turning around to me going, look at all these companies. They're just PowerPoint presentations. They've got .com named after them, and they're now worth 100 million. And everybody's saying they're going to collapse. Well, a number of them did. And that was absolutely right. They were incorrectly valued. But when 2000 came along, was it the end of the tech industry? Well, no, not really, because you've got Apple and Spotify and Amazon and goodness knows what else, all these companies. And we've actually seen the birth from it. And I look at that as new economy as well. If you look at what's happening in the new economy, that doesn't mean just crypto assets or digital assets. We're looking at e-commerce, we're looking at e-education. You look at whether it's electric vehicles or hydrogen vehicles. You're looking at all these different types of businesses. And there are thousands of really good companies out there in the United Kingdom today. You know, many of these new economy stocks is not the end of the new economy. This is the equivalent of 1990 happening all over again, whereby some of these firms are going to go on and become incredible companies for the future. And that's what I think investors need to look at. And the other thing that's happening in this paradigm shift is the interest of the retail. How many times you've heard me turn around, I've bored people about we have to get the public back into public markets. Because it's different. I come from the baby boomer sort of age. But for the millennials, for the Z generation, they're going to make their wealth in a totally different way. I look at it, I opened up an account on Revolut a few weeks ago. Yes, I'm late to the game, like so many people. It's my generation.
I mean, I've embarrassed myself by saying exactly the same thing. We both came in at the same time. Finally joined the Revolut revolution.
You know, when you look at that, what is so interesting, because my children obviously had done it ages ago and told me, but within 2 minutes I was able to have an account in euros. I had a euro virtual debit card. I had a sterling card. I had a sterling virtual debit card. All these different things. I had a wallet for cryptocurrency. But what I noticed, and I need to sort of really get in touch with them, is I couldn't trade a growth stock. I didn't have access to a whole load of strong financial security investments that should be available to the retail. And actually what we need to do is we need to incentivize the public, the retail market, to make investments in growth companies. The capital of the future isn't just coming from family offices and traditional asset managers or high net worth individuals. It should also come from the retail. Why? Because history has shown that the most successful assets for the last couple of 100 years have been growth value funds of small caps. Now, that is really important. If we can get people to get portfolios, not all their money, but portfolios of these growth companies, there's wealth creation. And the wealth creation will come for the people who are in their mid-20s. And they'll have access through their smartphones in a really, really simplified way. Instead of this whole image of being very snooty stockbroker wearing pinstripe suits and part of the city, it's a big turn-off for that generation. And we need to make it a modern way of trading. And that is what Aquis is all about.
Tell us what needs to change and how that sort of, how this sort of movement that you're on becomes inevitable.
Well, I think the first thing is education across the whole marketplace about how important retail plays in primary and in secondary trading. I look at it, if somebody had told me when we floated 3 years ago that how important the retail was, I would have been much, much wiser and much better off now. A company like Aquis, I think we've performed well. We've always set expectations and beaten them. Our stock performance has been pretty good, but it's not the most liquid stock. Why? Because traditional asset managers who've invested in us, they like the story, they hold the shares. That's what people do. But what you want are people who are not long-term holders. You want a mixture between those who are long-term, those who are short-term. Now, the retail player tends to be, although we'd like to see some of them hold it for longer, but tend to be more short-term investment. And actually, when you do that, you've got the turnover. Once you get liquidity and turnover in a stock, you get more asset managers wanting to buy because there's enough liquidity for them to be able to buy. And it's a self-fulfilling prophecy. So it's really, really important that we get the retail involved. So going back to when we IPO'd, I would love to have seen a number of our investors in the IPO being retail market. It helps. And that's why companies like Primary Bid and others, I think, are doing the right thing in the market now by actually getting investors. And we're fully, fully supportive of making quite certain that we get the retail in, not only in the IPO, but let them trade the secondary. Secondary trading is important because, of course, the more liquidity you have in secondary trading, the lower the cost of capital is for the company if they want to raise more capital. So in other words, they have the ability to be able to raise. That's one of the advantages of being public, is you can raise capital whenever you want. And of course, if you've got lots of liquidity, you can raise it at a lower price. So it is really important to get that trading. And that happens not only from the institutional investors, but again, through retail, high net worth, qualified investors, family offices. And that is all about ease of access.
So it's an interesting sort of piece. You talk about growth businesses and the natural sort of motion is to move into those VC-backed funds that allow people to grow. This is an alternative to it. Do the two work in direct conflict? Is there a way that the two can work better together? I mean, let's look at that growth space. As you say, look, it's really important to the country. And this, I think of all economies all over the world, the SME space of the UK is probably the powerhouse of it. I mean, it is.
Absolutely, it is.
So what's the sort of golden ticket for to allow and afford that growth to happen? It becomes so important to.
I'm not a fan of the sort of the American word co-opetition, but actually in some ways this is what it is. Because if people often turn around and say, Alasdair, you've set up you bought the license for the Aquis Stock Exchange, you're changing the rules and regulations, bringing proportionality in, connecting people, new technology. And they say, well, you're competing with AIM. Well, in some way, we do compete directly with AIM. But actually, I don't view it that way. I view it as we compete also with venture capital, because it's really the origination. These companies, when they're looking to raise capital, they need a choice, and they need a better choice. And today, predominantly, it's done through venture capital. And what I want to do is make certain that the public markets are seen as a true alternative. So having said that, are venture capital our direct competition? No, because they also need an exit to come to a marketplace for when their investment and their funds need. And I want us also to be a venue where people can go public once they've gone through venture capital to get more public involved in, and more institutions involved when they want to sell their stakes. So this is why there's that sort of horrible word of co-opetition. But we need to work alongside them, but we also need to compete. And that's healthy because competition, why is the United States so successful in its capital markets compared, I believe, to what happens in Europe? And the answer is because you've really got competing stock exchanges. And if you have competing stock exchanges, you get innovation. Now, stock exchanges all over Europe will say we compete, but in truth they don't. The German stock exchange, Euronext, or the Swiss stock exchange, they operate within their own national boundaries. You don't get many, a handful, but you don't get many German companies, particularly in the growth stage, wanting to go and list in London or in Spain or in Italy or in Scandinavia or whatever. They stay to their domestic markets. And therefore there isn't actually any real competition between the national market and somebody else. I want to come in here and be that competition. It's absolutely open, because I think that we can change the way that markets operate, the way the primary function takes place, the way you can raise capital, and you've got to do it in a more modern, less vested interest, more transparent environment.
I'm just, as you're talking, I'm just thinking about friends and people I've spoken to over the years who've listed and delisted and seen benefits from growth and also horror stories by the same rationale of doing that. I guess the sort of differentiation around that is there's a lot of horror stories about VC investing money and how that's gone through this, but it seems to be disproportionate as to where the sort of stress of each area goes. I think there probably is a bit of a stigma about listing as a young business, as a growth business, and the sort of implications to that. Why shouldn't people be intimidated, is a word we've used before, about that sort of?
Well, because I think that you're absolutely right. There is a stigma. And like many stigmas, what we've seen with diversity and inclusion, there's lots of things that go on in here, which is like, of course you want diversity, of course you want inclusion, but there's lots of stigma has gone back. It used to be one which I'm passionate about. Anybody who was made redundant or something was the stigma. But actually, there's nothing. That is a fact of life now. And it's not negative on your CV in any way to have had a past where you've been made redundant. These things happen, and it's the same thing when it comes to failures on a stock exchange. And interestingly enough, it's always the stock exchange, whether it's Aquis or whether it's the London Stock Exchange, that gets blamed for a failure. Generally it's the company. And the purpose between which I think Aquis is really, really strong on is we really believe in transparency. So investors need to have fair, equal access in all ways. They need to see everything that's out there in a company. They need to understand. They need to make quite certain that there's no bad behaviors taking place. That's the job of the stock exchange. But we can't make a company succeed. Sometimes a company is going to be in the wrong business, doing the wrong thing at the wrong time, and it's going to fail. And there's nothing wrong with failure. We obviously don't want all our companies to fail, absolutely, but we'll have many successes and we will have failures. And that's a fact of life too. And it's not a stigma thing. It's not one of these things to turn around and say, well, you shouldn't be trading on Aquis, some of their companies fail. That's part of a slightly higher risk investment in growth companies. But the returns on growth companies can be phenomenally high. And therefore, that's why you're making that investment. We're not saying that everybody should put 100% of their portfolio into growth companies. Quite the reverse. Every asset manager will tell you that isn't the right way. But it's a mixture.
And the returns for the companies themselves by listing can be that much greater from it at the same time as well, in terms of valuation.
Well, in terms of valuation, but most importantly, it's access to capital. You want to scale up. You very kindly said earlier on, you said, Alasdair, you took a risk by investing at a time during the pandemic. Well, I don't think it was a risk because I knew our growth rates. I knew what we were doing. I think we had a pretty clear vision. I wanted to invest and put more money into something because we believed we can grow and get a better return for our shareholders. That's the same with any other company out there. If their proof of concept has started to work, their revenues are starting to build, you want to scale up. And you want to scale up as quickly as you can and most efficiently as you can without losing control. And the problem is, quite often, if you go the other route outside the public markets, you lose control. The great thing about the public market is you can be an entrepreneur. You might want to sell 30-40% of your company in the public market. You might, you still control and manage your business. You can incentivize your staff because there's a daily price, so you can give options and warrants to your staff to motivate them. There's so many benefits from being public, as long as you take away the sort of this whole image that you have about, it's so expensive, it's so time consuming, it's so difficult. And that's our job as an exchange, as a next generation stock exchange, to be able to make life simple and easy for the issuer.
And do you see that next generation as something that's landing now, that people are starting to recognise, and your numbers pretty much suggest that straight away? But as with all periods of change, there's laggards, there's early adopters. What sort of, in the change curve, where are we?
We've still got a lot to do. I mean, I'm not going to hide that. I mean, otherwise we'd be doing every transaction there is in Europe today. There's a lot still to do. But we've made very, very significant progress over the last couple of years, and I'm delighted with what's happening. Almost every major online broker is now connected directly to us. The technology's changed. We've changed our rules. We've changed our regulations. We've got over 50 companies coming our way. We've got asset managers, over 50 asset managers invested in our types of stocks. That has never happened before in the long history of people who have attempted to break the effective monopoly of the London Stock Exchange. That's never happened before. So I do think the tide has changed. I'm not a patient person. You probably know me long enough, and I get very, very frustrated because I want everything to happen tomorrow.
Yeah.
But it's not going to happen tomorrow. We have to take time. There's changes that need to be made, regulatory changes. For example, it's taken over a year, I think, to get HMRC to change its guidance notes.
Yeah.
And the guidance notes actually, and I have massive respect for HMRC, but the guidance notes weren't correct.
Yeah.
And they were confusing. And the problem in our industry is if there's any form of confusion, people just go, don't.
Yeah.
Instead of actually having it clarified. Once it's clarified, then people will know that all ISAs and SIPs can actually get the tax breaks on all Aquis Stock Exchange stocks.
Yeah.
We have that gift as a growth market, but it was very unclear in the guidance notes.
I think that's a really interesting part of where you come from there, saying, look, there is this clarity or lack of clarity sometimes that sort of holds back innovation within it. You've spoken about the responsibility of government at certain stages and the opportunity that sort of sits in there with it. I'd like to sort of round on opportunity, because this is something that's very I think actually this show's been built on. We built this whole show on talking about positives from the negatives and opportunities out there in the marketplace and such like. I'm very passionate about this country and the opportunity and the entrepreneurial nature of it. I'm very passionate about seeing businesses grow and do well. I've said before that I believe that this time is important to be able to flush out, as 2001 was, of silly money going into bandwagons as opposed to cents. And I think what we're talking about here is good companies doing things well, having more options to allow them to scale their growth and move further forward. So let's finish by talking about opportunity on a macro level. We're sat there with all of this. Let's talk about a blueprint for what needs to happen right now and what can happen if everything goes right.
Well, look, I mean, I 100% agree with what you say. This country, whether one was a Brexiteer or a non-Brexiteer, has been gifted an opportunity to make it something very special and to continue its incredible history of financial services and the growth. We have probably next week the largest financial services bill in the history going through Parliament. There'll be a lot of negotiation. So it's really important that we get things like that right. Because remember, if we get this right, we become one of, if not the major global centre that will allow and attract business from around the world to raise capital, conduct corporate finance, M&A business, whatever it is, in London. And that is what excites the hell out of me. Because I do believe we will get this right. You don't set up an exchange if you're not an optimist. But I genuinely think I was worried when Brexit first happened that we could have scored an own goal and things would have got completely wrong. Yeah. But actually, it's been very impressive. The policymakers here, the government, the Treasury, the regulator, have all gone forward with the wholesale market review, the Khalifa report, the Lord Hill review. It just continues. And I think if we carry on with good market input, and that is really important, not just going to the traditional venues and asking them how should we do this, but getting general full market views and input, then I think we're in an extraordinary place to create literally for the next generation, an opportunity of working in financial services that will change people's lives. Yeah. And that's how I would like to finish my career in the end, is to be able to hand over to the next generation
that legacy. It's not a bad legacy, is it?
Of this is the change that was needed, and Aquis has played its part in that change.
Yeah. I feel like punching the air on all of that. I mean, it's exciting to listen to. Let's round off on Aquis yourselves. It's 18 months, as I say, since you were last on the show. We've caught up at numerous different stages beforehand. We were speaking out in Paris at Trade Tech, where it was lovely to see the team out there. Loads of exciting things to come moving further forward as well. Tell us what the next 6-12 months looks like for you. What are you excited about in the company at the moment?
Well, I think, for us, if I look at the three different divisions, I'm incredibly excited about cloud technology. I think we've become probably one of the leaders in the world of certainly exchange technology in the cloud. Yeah. This is not just putting servers in the cloud. This is actually working cloud technology. Yeah. Why is that important? It changes the economics of a business. And the statistic I love is cars, apparently 93% of their time, they either sit in your garage or sit outside your house. If I turn around to you and said, look, you can buy your car for 7%. That's all you have to pay. You have any car you like, you only have to pay 7% of the value. You'd bite my hand off. Yeah. Anybody would bite your hand off. And that is what, in some ways, cloud technology is, because you are only charged when you are using that technology. So exchanges traditionally have gone out and bought incredibly expensive technology, built data centers, paid for hardware, and have a high running cost.
Yeah.
But actually now, there's a technology where we can get to almost the same speeds and certainly the same consistency by providing new exchanges in a completely different economic background for them, because they will be charged when they use it.
Yeah.
That changes their costs, it changes the way that they can operate. And if you get that technology, this is what we've done working with Amazon Web Services and working with the Singapore Exchange, that proof of concept. And we've gone on and sold that now a number of times. And I'm really excited by the future in cloud.
Yeah.
I'm excited about the subscription model. I've been a subscription junkie ever since I sort of started this business.
It's fascinating, isn't it?
And I just think it changes human behaviour.
Yeah.
And we're going through a behavioural change right now in the industry, and that's one of the things I think we will continue to grow. And I look at the primary market, and for all the reasons we've just been talking about. So all in all, I look at this as a 3-cylinder car, and I've got a few old cars that never seem to work. But in this case here, it's a very rare thing that all 3 cylinders start firing. It's a very, very exciting opportunity in the future.
It's. I was speaking to a friend of mine at the moment who was talking about the growth of his business, and he said he'd never had a stage beforehand where all different 5 areas of his business were firing at the same time. When it does, just the force of nature of those 5 things all working together is just 10x their performance to extraordinary levels. And I think I
think we need to be optimistic in the future.
Yeah.
There are headwinds.
Yeah.
We can't shy away from those, and I think serious entrepreneurs will adapt and change according to the particular headwinds that are there.
Yeah.
Inflation is not a fun thing to see, and what's going on in Ukraine is just horrific. Such a horror story.
Yeah.
And we've no idea. Nobody can tell you when that's going to finish.
Yeah.
And therefore we have to learn to live with it and adapt during those periods.
Yeah.
But longer term, I think the financial services in the United Kingdom is in a very good place.
Well, I think it's about seeing opportunity and attacking opportunity. And what I loved about the last couple of years is pivot became a word that people didn't particularly like at one stage in technology. But I think it's so important to see companies adapt and improvise and overcome. To Bear Grylls it a little bit, but
absolutely
the scale of opportunity in everything is exciting, and there are fundamental underlying parts of institutional money still being there. It just needing to be invested in the right areas, solving problems, and there's so many problems and so many efficiencies that still need to be made out there at the moment through technology, which I see as the big driver that makes it a really exciting future. And by the sounds of it, the future is Aquis.
Well, I certainly hope it is. Technology is one of the things. It is an enabler for business.
Yeah.
And I'm absolutely certain that is. But it is vested interest that inhibits innovation. And we need to break down the vested interests in the financial services industry in order to create that innovation that takes us to the next step. And that's the challenge we all have.
Yeah, I absolutely agree. Alasdair, listen, I could be talking forever on this, and I know you've got a day job to do. It's been an absolute pleasure having you in person. I nearly said in the flesh again. As I say, that's a later show. Lovely to have you in here. Thanks so much for sharing the wisdom. It's always entertaining and it's always fascinating. And thank you all for watching it. I hope you've enjoyed it as much as the last one. I think this one's even better. And we will see you soon on another episode of FinTech Focus TV. Alasdair, thank you so much.
Great fun, Toby. Thanks.